Welcome to the CFA Level I Practice Test 1. Domain, Equity Investments. Question 1. An investor comparing an investment in an equity index fund to a forward contract's payoff key feature. A. Requires an initial premium payment to establish the position. B. Provides a return directly mirroring the percentage change of the index, less fees. C. Results in a profit or loss based on the difference between the future index level and the locked-in forward price. D. None of the above. Answer is C. Results in a profit or loss based on the difference between the future index level and the locked-in forward price. Question 2. Adjustment needed for a 2-for-1 stock split in a price-weighted index. A. Index provider must rebalance shares of all other securities, weights unchanged. B. Index provider adjusts the index divisor, changing all securities' weights arbitrarily. C. No divisor adjustment needed, split affects only the split securities price. D. None of the above. Answer is B. Index provider adjusts the index divisor, changing all securities' weights arbitrarily. Question 3. Characterization of global widget manufacturing industry based on HHI. A. Moderately concentrated industry with HHI 2600 causing rising competition and lower profitability. B. Moderately concentrated industry with HHI 2400 and many small competitors with product differentiation. C. A highly concentrated industry with HHI 2600 subject to regulatory scrutiny for acquisitions increasing HHI greater than 200. D. None of the above. Answer is C. A highly concentrated industry with HHI 2600 subject to regulatory scrutiny for acquisitions increasing HHI greater than 200. Question 4. Compared to physical replication, a long equity index futures contract is most likely to A. Involve rollover risk. B. Have greater liquidity risk. C. Be subject to lower basis risk. D. None of the above. Answer is A. Involve rollover risk. Question 5. Likely equity market impact of sudden geopolitical tensions causing uncertainty. A. Increased volatility and decline in share ownership as investors react to uncertainty. B. Reinforced obligations for companies to repay principal and interest on equity securities. C. Equities earn higher returns immediately, causing upward price trend. D. None of the above. Answer is A. Increased volatility and decline in share ownership as investors react to uncertainty. Question 6. Which asset class likely presents undervalued opportunities for information-motivated traders? A. Currencies in spot forex markets with rapid institutional trade settlements. B. Exchange-traded funds with market prices converging to net asset values. C. Real assets with unique, illiquid markets and management complexities causing misvaluation. D. None of the above. Answer is C. Real assets with unique, illiquid markets and management complexities causing misvaluation. Question 7. Impact on required return components when investors move to high-quality sovereign debt in distress? A. Decrease risk-free rate and increase equity risk premium. B. Increase risk-free rate and decrease equity risk premium. C. Decrease both risk-free rate and equity risk premium. D. None of the above. Answer is A. Decrease risk-free rate and increase equity risk premium. Question 8. Which industry aspect is most immediately affected by stricter environmental compliance for chemicals companies? A. Dividend payout ratios. B. Long-term growth prospects. C. Near-term operating profit margins. D. None of the above. Answer is C. Near-term operating profit margins. Question 9. At what stock price will a trader receive a margin call given 50% initial and 30% maintenance margins on a $50 stock? A. $35.71. B. $25. C. $35. D. None of the above. Answer is A. $35.71. Question 10. Which asset is most likely to trade at a significant discount to intrinsic value due to market traits? A. Shares of an ETF holding publicly traded stocks. B. Investment in private equity fund focusing on early-stage companies needing valuation research. C. Highly rated government bond actively traded in public markets. D. None of the above. Answer is B. Investment in private equity fund focusing on early-stage companies needing valuation research. Thanks for watching. For more learning videos and tutorials, subscribe to BISP Trainings.